Hey guys, Justin with Ready Business Systems here. Uh, I just wanted to go through our extended version of our pricing worksheet. So on here, if you're interested, under our freebies on our website, we have a copy of this free pricing worksheet. This is to help you figure out what your charge rates need to be for your company in order to make a profit and cover all your costs. So we have instructions on here. We have the charge rates, payroll burden, overhead, just a basic spreadsheet to figure out your numbers, an example here on how to figure that out. But what we also offer that we use for our clients and for my own landscaping company is a much more advanced version of the spreadsheet. So you can see on here charge rates. We still have it on here, charge rates. It's just a much more simplified version. We also have an overhead tab here where you plug in all your numbers, whereas on this spreadsheet, you just type in your total overhead here. And we also come up with one charge rate for the company on this spreadsheet, whereas on here we can figure out charge rates by services. And this one changes as you change your numbers. So there's other solutions out there if you want to look at them. QuickBooks has a way to do budgeting, as does LMN has a free budgeting built into their software. But as far as I'm aware, there's not a solution that's going to track live week to week in a better way than we accomplish with this spreadsheet, that you're on track for that budget and your forecast, like a rolling budget, as to where you're going to end up. So in this video, I'm going to briefly go through this. If you're interested in implementing this in your business, we can either sell this to you as a download, or we can do the initial setup for you to get your numbers in here, and or we can do weekly consulting calls to get your numbers in here for you, and we can review them with you week to week to hold you accountable for performance, figure out which crew's underperforming, if any, etc. So the way generally how this worksheet works is anything in yellow is things that you edit. Anything in gray is calculated and you don't change. The system calculates that for you. The spreadsheet calculates that for you. And that's the theme throughout the spreadsheet. We also have this light color. This is something you don't change on a weekly basis, but you're going to change this on a monthly basis. In each section here, we also have a training video on how to complete each section of here, so you can easily learn how to do that. So this is the weekly audit. This is the part that each week, and you can do this on a daily basis if you want to be more accurate. We also have, and this brings everything together. So where you really start is on this overhead sheet. So on your overhead sheet, again, everything in yellow, you're going to fill out, everything in gray is calculated. So what we do here is once a year, you're going to go in and you're going to create your budget. This is where you're going to create your budget. It's going to be your overhead for the year. You can change these categories here if you'd like. This is to match up with QuickBooks or whatever other accounting software you use. So you're going to go through here once a year and you're going to plan for the following season. You can plug in your numbers from the year before to get an idea of where you want to be, or you can start from scratch, which is probably a better strategy, because just because you did it the year before doesn't mean it's a good use of money. And you plug your numbers in here. Again, you don't change anything in gray because these are calculated from other areas of the spreadsheet. When you fill in all your overhead, it's obviously going to add all this stuff up. It's going to tell you your total overhead when you add all that together. It's going to tell you the estimated value of your company. It's going to tell you your estimated profit. It's also going to tell you your estimated cash flow, which is different, which can get confusing. So down, it's also going to break that into an hourly basis. So based on, I'll go through that in a second, the labor cost area of the spreadsheet, for every hour that you bill, you need to recover your cost of what you pay your guys, plus charge another $40.88 per hour that you bill in order to recover your overhead over the course of a year. So on this section down here, we have, this is kind of the balance sheet here. So yeah, balance sheet items. So in here, you're going to put in your beginning cash balance. You're going to put in your liabilities. You're going to put in your long-term liabilities here. So what we do here is we put in the monthly payment, the cost. This is for the cash flow portion, because that's going to be different, because what can get confusing for a business, especially landscaping, is this depreciation. So the problem with looking at just your profit and loss statement, depreciation, is that coming up? Right here. So, and here we have $80,000. So this is a fictitious number because your equipment, everything else in here, when you pay your office staff, when you pay for gas, it comes out of the cash that's in your account. Whereas this depreciation, it doesn't come out of your account. It comes out of your equipment. You lose value, but you don't see that. The problem is that if you don't plan on that, you're not going to be able to ever replace your equipment. So this is essentially a budget to replace your equipment, but it's a fictitious accounting number. That doesn't actually come out of your account. So that's for the net income. That's why it differs from your cash flow, because depending on if you have loans, if you take draws from your company for profit, this cash flow figure is going to be different because that's actually money in and out of your account. So down here is where we account for that. So this is money that's actually coming out of your account each year. So we need to account for that. So that's where this cash flow figure comes from. And the net income is kind of fictitious. That's for like tax purposes type of thing. But that's not going to be what's in your bank account. Cash flow for the year, that's kind of what's in your bank account. So moving on from that, we have labor cost here. So labor cost here, you're going to go in here, you're going to put in your employees' names and their wages. In here, you're going to be putting in your labor burden. So if you've ever run payroll before, you know it costs you more to run payroll because you have to pay taxes if you're not paying your guys cash. So this will calculate your labor burden. So on here, you can see it's going to figure out the average wages based on here. It's going to figure out the average wage in overtime. It's going to figure out this predicted overtime hours comes from another section of the spreadsheet. So it's basically come out with your average labor per hour, and it's based on the labor burden, your employees' pay rates, and the estimated overtime worked in a season. So that's what the purpose of this page is, to figure out what is your labor cost for every hour they work, right? Charge rates here, this brings everything together. So under company average rate here, so we have labor per hour, $27. So that's coming directly from this box here, rounded, $27 an hour, right? Your overhead per hour, that's coming from the spreadsheet over here. You can see overhead per hour, $41, right? So this is telling you that every hour that you work on the job, it's going to cost $67 to cover your costs, right? If you charge $67, you're just paying for your guys and you're covering your overhead, and you're basically just breaking even. The company's not profiting. If you're in the overhead there, your payroll, then you're getting paid from that. The other portion is this. So unbillable time is important to know here. So and we do have a little calculator here as well. So you can go in here for this section, and we're always updating this, adding videos, etc., and making this more elaborate. So unbillable time this is time that you're not on the property, right? So if you need to hit, this is before even adding the profit figure on here, but if you need to hit $67 on the job, well, excuse me, yeah, if you need to hit this on the job, then you need to be billing more than that. You need to be billing the customers more than that if you need to hit that rate for every hour you're paying your guys. So what we do here is we actually we use Service Autopilot, and it doesn't give you a good amount for drive time, like an estimated time. So we actually take the routes, we'll take a sample of days, plug it into Google Maps and see, all right, how long should it take to drive that route, right? So in this case, it's 1.8 hours. Here, this is coming from areas to the right. So during every day, you probably have to dump your truck, probably need to fuel your truck, probably need to get ready in the morning, probably need to clean your truck, and it's going to come up with an average time per day that you are performing these items. So this is unbillable time, right? You're not billing a client. So if we take the drive time here, 1.8 hours, and then on average, you might not gas every day, but on average, it's going to be a half an hour per day, roughly, of unbillable time of gassing your truck, getting ready for the day. The unbillable time will change depending on how many hours you work in a day. So it's actually better, just general knowledge, to work more hours per day, because then there's less unbillable time, because you only have to prep the truck less days per week. Presumably there's less drive time because you were already in the area, etc. So you can put in the days work per week here. Total unbillable times can come up with, so that comes up with like 29%. So we put a little buffer in here, 34%. You can also look at your payroll records and see what you have for unbillable time to figure out exactly. This is a good way to estimate what it should be, because here we say right here, it says idealistic, right? Like stuff's going to go wrong. You're getting ready in the morning, something's going to be broken. There's going to be things that come up. There's going to be traffic, customers that cancel their jobs, etc. Things that are going to create more unbillable time that's not accounted for. So that's why we allow this buffer here to be realistic in terms of what to expect. So that's going to pull in your unbillable time over here, this 34%. That's where it's coming from. You add in your desired profit margin, which should be anywhere 10 to 20%, depending on the stage of your business and how efficient you are. So it's going to come up with your rate at the end of the day, right? So this is what you need to be charging each hour paid to employees. So this is what I was talking about before. So if you need to be if you pay them for an 8-hour day, they're not billing for 8 hours, right? So this is where that unbillable time comes in. So we need to charge 34% more if we want to land at $77.58 an hour at the end of the day. We need to be charging more when we're on the jobs, knowing that 34% of the day they're not billing a third of the day. So that's where these come from. Down here, we have kind of more accurate ways to figure this out. So, in reality, maybe you can get this, you can get more than this for fertilizing. The market's going to bear a higher rate for fertilizing, but maybe for mowing, you need to get your foot in the door and charge a little bit less. So this is where you can put in your revenue, and you can put in the percent of your revenue, and then it's going to create a weighted average charge rate, which is going to be right here. So you can fiddle around with these numbers, adjust them how you please. If you think you can only get, in this example, we said for lawn mowing, maybe we can only get $85 an hour. Okay, well, maybe you need to get, $175 an hour for fertilizing. So you can play around with these numbers. If you know what percentage of work you're going to do, you get a weighted average, and you can still hit that charge rate you need to hit here. So that's what that's about. In here, this is just an average. This is a way to come up with KPIs, like what you need to be producing in a certain amount of days, depending on the service they're doing. So that's just for reference. You can print these up, put it on the wall, what have you. And then this part here, this is what you're going to do each week to make sure you're actually on track. So those 3 spreadsheets I just went through, those 3 tabs are just for making sure, setting everything up, right? Setting a budget for the year. Once a year, you're going to go in here and you're going to set this budget right here. It says update monthly. So for the year, you're going to go in here and put budget hours. So you can pull this from the previous year, but this is the number that we're dividing the overhead by. So if you take the total overhead divided by 10,000 hours, that's what you need to get per hour to recover your overhead. So hours are very important. How many hours they work in a year is a very important part of this equation here. Budget hours per week, this is calculated based on the month. So it's going to come up with your budget for what you need to hit per month right here. And then we have budget overtime. So this, again, you're going to put in estimated overtime here. And this is where that 7% came for the labor cost. So you want to make sure you're tracking that. And then your budgeted charge rate here, which we put in from this initial charge rates tab, but you want to hit per hour, right? I believe that might be pulling in. Yeah, it's pulling in from the other tab over here, the charge rates, right? So that's pulling in from this $78 an hour we got here, rounded, $77.58 rounded. So what you're going to do each week is you go in here and you're going to overwrite these numbers, each month. So if you planned on 1,200 hours, but you only hit, but in this example here, we actually got over the hours, 1,535. That's great because now your overhead per hour is less. So you're going to make more money that way. So this is going to tally up, and as you change this, it's going to live change. As this number changes, this total, it's going to live change your budget for the year. It's going to continue forecasting the profit you're going to make. In this example here, the budgeted revenue is 783, and we're actually heading towards 883. That's what this example is here. So the other thing you're going to do each week is you're going to go in here, you're going to put in the hours each one of your field workers only worked, because presumably your overhead, your staff, yourself, maybe your office people, your mechanic are overhead. So we're just caring about the field hours here. So each week you're going to put in your guys' names. These pull from the other spreadsheet. It knows their pay rate from the other tab over here. You're going to put in the hours they worked that week. It's going to figure out the overtime, and it's going to calculate your total labor costs for the week. Over here, you're going to put in your job supplies. So you can put in your list. We have a spot over here. You can put in all your contractors over here. From a drop-down list, they can be selected. This comes off the credit card, so it's not like, so it's your credit card, bank account, whatever. And you can assign it to whichever crew use these materials, and this will adjust. If you look over here, it's changing the numbers. It will adjust it'll apply these job supplies to that crew, so you can get that charge rate on that crew. This over here is the most important section. This is highlighted in orange, so your gross profit. So, you need to hit a certain gross margin on your work to cover all your overhead. So we're going to track this each week so you can see the budget and the actual. Down here, you can track each week. This is entered in here, the gross margin, and it's going to track how much you've recovered, how much you need to recover for the year, how much percent you've recovered, what percentage of the season is completed. So you update this each week so you can see if you're on track or behind each week to recover that gross margin. And then we have here, so this gross margin is coming from the revenue, right? It's coming from your budgeted revenue, but really this revenue is based on multiplying the field hours times the charge rate. So if you get a lower charge rate, more field hours, you can come to it's not, they cancel each other out, they're multiplying anyway. So you can still achieve your goal here for your gross margin if you get more hours in, because you're making a little bit of money on more time versus more money on less time is the way that works out. So here it's breaking it out. You know, what was your budget charge rate? What do you get for a charge rate? What was your budget hours? What do you get for hours? And then from there, it's going to calculate your gross margin based on these job supplies here. It's going to take out, and your labor costs, it's over there. It's going to take out. So if there is a problem here, what you can do is this will break it down by crew, and then we can start to figure out, all right, these crews got these charge rates. What's the lowest one? And you can investigate that and see, all right, why did they get a low charge rate? You can go on the dispatch board. You can look at specific jobs, specific quotes, and try to locate the problem as to why the charge rate was low. What else we got here? Gross margin, we got over here. The cumulative crew performance. So if you choose to use this section, you can track their charge rates, each crew's charge rate throughout the season. To see if they're going down or up and comparing those numbers. And this is just to keep track for the monthly tally. So once a month you go to put these numbers in, you have the total there. The other thing I included in the spreadsheet is we have a deposits worksheet. This is kind of that cash flow thing. I've run across a bunch of people who have issues where they think they have more money than they've actually made because those deposits they're taking, they haven't actually earned yet. So what this is for is kind of tracking those deposits. It calculates a credit card processing fee for you if you want. So you can charge it to the customer. And if you keep your deposits in a separate account, you can then transfer that money back to the operating account when you've actually earned that money. So you don't get your bank account balance confused, kind of like the profits first idea. Lastly, we do have the ability to create these rate matrices. This is just in here as an example. But if you know the hours, if you know the square footage of a property, right? And you know how many guys are there, how long it took, and you get an average of a whole bunch of data, this is how you can build out these rate matrices. So you can figure out, all right, so on all this data, I'll just go to this example here, lawn mowing square feet. So you know that on all these properties we have that are under 4,000 square feet, it costs $59.50 is going to be our price to hit our charge rate, because this actually pulls from the charge rate spreadsheet. So if you know you need to hit that rate, essentially as you update your numbers each year, we'll pre-populate these rate matrices for you so you can update them in the system if you use Service Autopilot. So 0 to 4,000 square feet, you know, average a large set of data, bunch of customers. It's going to cost $15.50, 0.7 hours budgeted cost. These are for your rate matrices. What was interesting in this example is that it actually costs more to cut these small properties than it does for the next one's actually cheaper. And if you think about it, like at first thought, it doesn't make sense, but if you think about that more, smaller properties probably require push mowers. They probably require pulling into small cul-de-sacs and turning around. So it does kind of make sense if you think about it. But anyway, this is an ability to create these rate matrices. You can do it for gardening, hardscaping, whatever you have data for. And you can build that. You can customize this to build it off of your charge rates and build your rate matrices for you. So pretty cool stuff. So anyway, if you're interested, feel free to reach out and talk with us. But yeah, very in-depth, as you can tell, way to track your progress. But I mean, and this takes time, you know. We are someone that does it. It takes an hour to a week. But I mean, why else you run your business if you're not making money, you're not tracking it? You don't want to be spinning your wheels. So very important to track your finances. So thanks for watching, and feel free to reach out if you have any questions, readybusinesssystems.com. I'll catch you guys soon.